So as the shareholders would have noticed and other stakeholders, Antler is busy going through a strategic change. And in short, we're looking to run Antler as a business. We want to generate value and build value and realize it in our market cap and then ergo our share price. We're going to do all of that while we remain entrepreneurial, delivering value to partners and communities and everything. But what this allows us to do is to generate both short and long-term revenue for the company. And the hope is through that this short and long-term revenue would allow us to do less highly dilutive financing and allow us to generate and have exposure to the multiples that come from a discovery process. And that exposure is going to be kept through royalties. Those royalties will continue moving up, and what they will allow us to do is build tremendous value. So how we're doing this all is the exciting part. Well, we're doing it through organic royalty generation. So it used to be called project generation. We're now not retaining, we're not going to focus on retaining equity in projects only. We're going to focus on definitely retaining a royalty on all our projects that we produce, as well as getting cash and equity payments as well, and exploration commitments from our partners. What that allows us to do is deliver the value on a short and a long term for all our stakeholders, for our shareholders, our partners, and the communities we operate in. Project generation, as I'll show you as I work through these slides, is already a profitable business on its own. And the approach that we're doing ensures that this growth is through income generation. And it's not just targeting a hope that we hit this at the right time. I've shared a lot about our team in the past, and we do have proven geological expertise. And we've got active exploration projects through internal as well as active partnerships going throughout the whole area of Southern Africa. And that's an exciting part. And we're doing this all with ESG excellence in mind. So what we're creating here is we're not only creating a company that has short and long-term revenue, a business, but also for our partners, we are creating a product, which is our projects that we'll be generating, that give them strong technical foundation, forward work program, as well as a strong social license to operate there. We believe in Africa as a region. We believe in the transition that Africa is currently going through, and we are the correct team to help build those relationships and social licenses that allows for foreign investors and other investors to come in and look at our projects. So therefore, we're looking to run Antler as a business. We create a good product that has got sound technical, sound ESG, and sound legal compliances, and then that is then sold off for value to our partners once they come in. Now, the plan and the trick with project generators or royalty generators is that you don't just hold land to hold land. You need to hold strong, viable projects. You need to have multiple projects at various levels going on. And these projects have to be in commodities that are coming into a positive market sentiment. As we know, we tend to run a counter-cyclical project generation role. We look at projects that have the ability to be acquired either through local pegging or doing transactions with local prospectors or stakeholders. We treat them fairly as partners, and then we bring them along once we then do an exit at a later stage if the project moves up or passes our mustard. So at the moment, we have six active projects. We have the 4 now in Namibia with 4 applications that we are busy waiting to be awarded. And then we have the 2 in Zambia, 1 gold and 1 rare earth there. And then we have a new application that we're busy waiting for us to be awarded. What this allows us to do is build a pipeline of opportunities. And it allows us to have projects at various stages along the royalty generation triangle that we then don't focus our energy on the projects that make the strongest technical sense. So let me put my pointer on here. As you can see on the left-hand side here, this discusses all our current applications that we have in our pipeline in Namibia and Zambia. These are filling our conceptual projects foundation here. These conceptual projects are early stage projects that we have managed to secure massive land on it that have strong technical backing, strong technical fundamentals, and we are now going through a de-risking or testing of our concepts. Once these concepts have then been proven, it then moves up onto the exploration stage. As you saw recently with our news release, we sent out at the beginning of this month, in partnership with RES Prime, an NGO, we have moved our Ufipa Gold Project, which is a large exploration project in the northeast of Zambia. We moved it up from conceptual to exploration. And in essence, what we're doing there now is we are willing, and we've upgraded it to spend money on the ground, get boots on the ground, and get our first set of results. And that's going to further validate our concepts. And that allows us to move it to the next stage, which is the pre-discovery stage, and the stage where we would normally be transacting with our partners. We expect, as this pipeline continues filling into this triangle, that a lot of projects will fall off during these areas. And that's a positive for us. We don't want to keep a project if we don't see that there is a long-term value to it. We don't want to waste any more capital or resources on that project. So we do that by de-risking it step by step. We follow what's known as the mineral systems approach. And that's a set of questions that have to be answered based off technical analogies, which allow us to move it up and then justify further expenditure as the risk decreases. The mineral systems approach is an approach that was pioneered by the oil and gas industry. Due to the high cost of drilling in the oil industry, they needed their targets to be extremely de-risked by the time they got to drilling. We're using a similar approach so that we do not, two reasons, we do not waste money exploring on projects that don't have any endowment capacity or any potential of actually moving forward into any development or producing asset. And secondly, so that the projects that we sell are de-risked and we can get a high value, a high ask price for those, because the partners that we sell to know that the technical work has been done, and that allows them to move straight on to the drilling. So that gives us a value addition there to the projects that we're selling, and it allows us to ask higher prices. What this also allows us to do is it gives the company optionality. The traditional junior model is to find a project, invest a whole bunch of risk capital into that project, and develop it up to a feasibility stage. And then on top of, once that is done, and that time span, according to the mineral cycle or the Lazargo curve, can span anywhere from 5 to 15 years and takes huge amount of risk, normally leading to highly diluted financings, and then also potentially ending up with you holding a project that is either overcapitalized or is not attractive to people who can afford, or partners who could afford to purchase it and take it into the development slumps and then get it into production. So what we're targeting to do here is give us as a company and our stakeholders, we want to give them short-term revenue income through our partners coming in and paying cash and potentially equity in listed companies, as well as exploration commitments on our projects. There's a value addition there. We maintain a exposure to the discovery cycle if discoveries go from discovery into development and production through our royalty and other holdings. But that also allows the company to have optionality with projects. So for projects that are sitting in the pre-discovery section, like our Onkoshi and our entire Erongo project package, it allows the company to strategically look at options. There could be options to identify correct partners and sell them out. There could be options to self-finance to move it along into further discovery or feasibility, or there could be options to look at spin-out options or other such mechanisms. This allows us to act entrepreneurial, but also allows us to protect against highly dilutive financings. And as you see there, we've put Kessia onto the next stage, so that's been upgraded. Kessia, from a technical standpoint, no discovery has been made on it, but from Antler's perspective, we have signed an agreement with Paresis Resources in the second quarter of this year, and we have now a royalty once that option agreement has been fulfilled. That came with certain cash payments, as well as equity payments and exploration commitments during the option. So that shows you how value can be created as we move along this, and it shows how the company is protecting itself from wasteful expenditure, but also from any delays that would come from the bureaucracy of licensing issues and everything like that, because we have a padded pipeline of projects that can generate not only work, but news and project or deal flow for the company to create revenue opportunities. Just to display some of the tangible results that have come through. Obviously, I touched on our Kessia rare earth property in Zambia. We've got strong partners there, Paresis Resources. The year it was optioned out to them was this year. And the commodity there are the rare earth elements. The term there, again, we have a 2% royalty. We retain a 49% interest in the project. There's project expenditure payments and cash payments to ourselves over the course of this earn-in option. And there are exploration expenditures. So that's a quality option over the next 3 years. If the results are there, Paresis Resources will move through, allowing us to generate some short-term cash and then maintain our interest on the other side. Secondly, we also announced the Crescent Lake lithium deal, where we sold 100% of our Crescent Lake project in Ontario to Midex Resources. We sold that for a cash payment and then 6% common share of Midex. The transaction was 12%, but we had a shared agreement with Sona Nanotech, a company related to Antler Gold. So what that allows us to do, Midex Resources is also in the process of going through a listing transaction, a public listing transaction. Once that is completed, Antler Gold will be sitting with 6% of tradable equities and a value. Again, allowing the company to maintain an exposure to lithium in a very hot area of Ontario, located right next door to green technology metals, the Crescent Lake projects, and exposure to a company with a strong management team and proven track record with making discoveries.